Hi, thanks so much for tuning in. You're watching BQ Prime. I'm at the CMT Association here in Mumbai, and I'm in conversation with Sunil Garg, who is the Group Head Research and Investment at Lighthouse Canton. Thank you so much, Sunil, for taking the time. And, I found it interesting what you were speaking about in the conference here was the point of the breakout for the Indian equity markets. We seem to be at a juncture where that is possible. But the fact remains that the S&P 500 seemingly is in a downturn. The US equity markets are. And is there a possibility of a massive divergence? To a certain extent, that divergence has taken place. Where do we go from here?
So I think, look, first of all, if you look at the Indian market, and I'm going to keep the discussion technical for now, given that we are at the CMT Association event, I think the Nifty is on the cusp of breaking out into all-time highs. And technically, you always trade breakouts into new highs. So from that perspective, I just think from every perspective, the charts on the Indian markets and Nifty do look one of the strongest in the world, if not the strongest. They look very attractive. The question is, equally, the US market and the S&P does not look that pretty. So I guess the big question is, can India continue to go up if the S&P is going down? It's not something we've seen in the past, for that matter, a non-US market to go up while the US is going down. So that probably will be a more medium-term challenge. I think in the short term, what you saw, you had the S&P still end up higher. I think as the markets get somewhat comfortable with the inflation peak coming or the rate hiking cycle perhaps coming to an end, I think the S&P has one more bear market rally, and I think that would be in sync with India going up. But at this point in time, I think India is outperforming, but I would be bullish in absolute terms as well.
So, but that's a shorter term. So what is the time frame that you're looking at then from that perspective?
See, I think as we head into, and if we look at 2023, I do think that the S&P will find lower bottoms compared to the one we've seen recently. So we have not seen the low in this cycle yet. And I think at that point in time, it might become tough for any market, because capital flows are connected globally, to go and keep going up in absolute terms. But remember, once we break out above that high in the Nifty, that will become a support level. So I would say that you will probably get wobbles. We have done a large part of the journey of the decline even in the S&P. So you will see volatility, but my time frame, if I look at all of next year, is S&P goes lower, Nifty gives back some of its gains, but that will again prompt buying opportunities as we hit the support levels.
Shifting asset classes completely, because I heard you say this again on stage. You said gold is something that you look at, and as you know, we in India, we're holding a lot of gold, but it has underperformed in a big way. Of course, understandable considering the kind of rate increases we've seen in the Fed policy rate and the way that the dollar has moved. Why do you say don't sell gold yet?
So look, I mean, the fact is, gold, the world has given up on gold. And as you said, it hasn't performed absolute terms, relative terms. It's just been a dead investment, which does not even pay you an interest rate or a coupon or a dividend, right? So why do you want to own gold when it just gets you nothing? Now, I think rather than think of gold as an asset class, think of it as a currency. And effectively, on a 2-year US Treasury yield, you get 4.6, 4.7%. On gold, I get nothing. But if that, at the margin, the yields are peaking, then it's time to perhaps go into another asset class. I think the charts on gold, we are not there yet. But I do think, I do get a sense that we're trying to form a bottom. There is a strong support, literally, and the gold did bounce up in the last few days.
What level are you looking at?
So around 1620, 1650, around those levels, gold is found a bit of a bottom. It's not fully in the clear. But at the margin, to me, if I'm going to be thinking the dollar's going down, rates are peaking, gold becomes a logical one. And I think the charts haven't confirmed it, but they're trying to get there.
So the key trigger that you watch before the gold price move would then be the dollar index? Is that your major indicator?
So the DXY and the yields are going to be going in sync, because if you're coming out of the dollar into, which is a high yielding currency today, you are looking at alternative. Are you going to buy the pound sterling? No. Are you going to buy the euro? No. Are you going to buy the Japanese yen? No. But gold is an interesting asset class. And if you think of the DXY strength, it's against every other major currency, but also against gold.
And from the fundamental perspective, if we do hit recession, then gold becomes that much more attractive.
Yes, exactly. It's not been the inflation hedge people think it was. Partly, and I think largely, because you have yields on dollars which are so strong. When gold yields you nothing, you can buy one of these government bonds which get you a 2.5% yield in India, but you're still taking the risk, and you've seen your principal erode as well. So I think that's why I was saying you shouldn't, if you haven't sold your gold,
don't give up on it.
Don't give up on it just yet.
Thank you so much for taking the time. Pleasure speaking with you.
Likewise, thank you.